billahi minash shaitanir rajim.
Iwapo una nia utafaulu.
On KBC Channel 1.
I was held captive for 12 years.
Episode of
Inaona kama kiasi hiki hizo zitatosha, sio? Pesa si za kwangu. Kwani wewe unaonaje?
Lazima ujue senti zatoka wapi unazokula. Sikujilia tu na kujistarehesha na nini kama tuonavyo hapa TV, makochi na nini.
Si chake hicho chumba, ni muongo. Nitakusema na beni nyamazeni, nitakusema si chako. Waacha babako hapa kukopesha kahawa na mahamri. Wareresha tu zako Malindi. Nyo.
This weekend on KBC Channel 1.
People disapprove. I know you are jealous because he has it better than you. Maybe it's high time you also need to look around for a suit, eh? Your jealous is becoming too loud.
Quit your unsolicited advice, but you should remember that Queen A has it all under control, or otherwise. Dude.
I think sane men should stay single for the rest of your life. Kinyanjui, what do you say? Tulu, my brother.
Hyena and Ngoda now flames. Wonders shall never end.
Who are you calling hyena and God? You small person. Stay out of my life.
Bara, you better start talking.
Hey, what do you mean? We were going to talk anyway.
Classmates, every Saturday on KBC.
Tonight on KBC Channel 1.
For killing Sushim, we must kill Ashok and make the rumors of his death come true. After that, I will send Sushim a message which he is waiting for. Sushim will definitely come to meet you.
I wanted to share a lot with you, Karniki. A lot. I wanted to tell you the truth about me. I wanted to make you realize that not every Magadh citizen is bad.
You have hurt me the most now. I shared every wound on my heart.
Ichok is searching for you desperately. He won't let go of any chance to kill you. Do you want to give him that chance?
And on KBC Channel 1.
I was held captive for 12 years.
Subject to escape with someone in the building.
Now, humans hunt the lichens and vampires. This is a new war.
We stand and we fight.
Whatever it is, it's more powerful than any of us.
Where's Michael?
Well, a very good morning to you. It is Thursday, the 14th of January 2020, and you're just in time for BizCheck here on KBC Channel 1. Today, we have quite a lot lined up for you, including the stories coming from the field. The acting Chief Justice who took over that was Monday, Philomena Mwilu, is set to officially visit the Mombasa law courts. Of course, our reporters in Mombasa are following up on that, as well as a number of stories, including the update from the medical sector. The doctors in Mombasa County are set to meet health officials, as well as Governor Hassan Joho, on matters the strike and the firing, which was revoked the other day, of about 86 doctors. That and much more, including a conversation we are about to start on matters financial planning for the year 2021, investments, what opportunities are there, and how can you save during adversity. Remember that last year a lot of businesses as well as individuals had their income slammed by that COVID-19 pandemic, the effects it had on the economy, and just how do you recover from that in 2021 and ensure that your finances are going on well. Well, to speak about this is one Mir Thakkar. He is an investments analyst and he is joining us on Zoom from Mombasa. Good morning, Mir Thakkar. Thakkar, if you can hear me, this is Betty Kiptum from KBC Channel 1, and we just want to have that conversation on matters of financial planning, investing and saving in 2021. Kindly just nod or say good morning if you can hear me.
Yes, Betty, I can hear you.
Yes, thank you very much for speaking with us or joining us in this program. Let's first start with a recap of really 2020, the year that battered most people's pockets, from businesses to individuals. Could you just take us through how that impacted people in terms of savings and investments in the year 2020?
Well, Betty, I think 2020 was quite a unique year, but we had already begun this recessionary cycle before that. The growth rates of the economy for each quarter in the 5 previous quarters, up to the quarter that, the pandemic struck, had been decelerating. So, it was like there was a bit of sluggishness already entering the economy. And we also had a lot of structural problems. Like, for example, our reserves were being refueled consistently with debt. And this was actually one of the issues that, resulted in the Kenya shilling depreciating about 7 to 9% throughout the year, depending on the lows and highs. But it was actually even more negative for those in the informal sectors, because many of them had curbs on their timings, the timings of work, because these are people, the mama bogas and the hawkers. They are used to hitting the streets at 5 a.m. in the morning. And the curfews and, the restrictions on movement and everything did hamper their business. But again, we had a collapse in consumer spending, layoffs that saw unemployment rate across 10%. And this is just formal employment. Remember, we have very few formal employees. Our informal sector is huge, and it is 7 to 8 times larger than our formal employees. So all this, resulted in a decrease in the middle class spending, as well as a lot of difficulties in selling goods for many businesses. Stocks were piling up. And yes, I agree that some of the tax cuts introduced in April 2020 did help in ensuring that individuals could, at least have some extra money to spend. But the pure assumption was that those individuals were still employed, were still generating business income. And many sectors did have complete collapse, like the tourism sector, the education sector, even to some extent other sectors had a deceleration. The education sector was nil completely. And I think the psychological distress from all this was also unprecedented. We probably had a lot of mental health issues as well in the economy. Mm-hmm. And, when people are distressed in such a way, they don't have that entrepreneurial spirit to go out and take risks. And without risks, there is no capital resulting in, profits. So, yes, this was a year to forget. or perhaps to remember forever, so that we prepare for such eventualities.
Preparing for such eventualities, of course, as you've rightly put it, quite a stressful year that was, both economically, psychologically for most people, because of those effects of that pandemic. Now, moving on to 2021, as we enter the new year, of course, many people are still recovering from that particular hit that they got. Some businesses as well as individuals, you've talked about the tax cuts, the tax relief that was introduced in April. Of course, that was now eventually halted starting January this year. And that means that more money will be leaving people's pockets towards the end of this month or during this month, unlike the previous month. So how is this going to impact people's financial planning?
Yes. Perhaps not the right time for more money to start leaving when people are yet to fill their pockets.
Right, so how is this going to affect the financial planning of these people, or how can someone, even with the little that they have during this time
First of all, we should look Kenya's...
Go on.
You see, we should look at Kenya's gross savings to GDP. It's very low. It's just 8%. And it was 16.7% in 2007. So we are having a situation where there isn't enough money saved to individuals to be directed into capital investments. You know, capital investments come from the savings of savers, and these savings are directed then to the entrepreneurs through the banks, and also by individual investments through cash. So this is a serious problem, and results in us relying on FX debt and also on FDI. And I don't think economies can grow robustly without increasing the savings. And when I said in our previous question that this is actually a year to remember so that we prepare for eventualities, it means that when we have some funds saved aside for such eventualities, we can at least be more resilient in times when economies slow down or job cuts strike or our spending power collapses due to externalities like, God forbid, inflation.
Sakar, when you talk about the informal sector, of course, the impact on that sector was pretty massive, largely because of how risky or just how fluid the sector is in terms of its dealings. The banking industry has often just said that the SME sector is pretty high risk, and eventually they don't get the credit that they need to sustain these businesses. Now, when you talk about making sure that there is some resilience that can be seen in future shocks, so to say, could you just give us examples of what can be done to ensure that in case of a shock like this or any other, really, the SME sector, which supports about 14 million Kenyans, is going to be a little bit more resilient than it was last year?
You see, Betty, first of all, we need to look back at our history before we look ahead. In 2016, an interest rate cap was introduced that effectively curbed spending to, effectively curbed lending to SMEs. Now, you know, SMEs are high risk, as you said. So these are people that can access funds, no doubt they can access it, but at higher rates, say even 20%. Now, the interest rate cap stopped money from going in those directions, and we saw actually Shylocks and mobile lenders and all these types of innovative products ballooning. So this also affected the capability of the informal sector to grow, and also their transition to the formal sector by accessing finance. This is also a very important fact, because the informal sector can only transition to the formal sector if they are availed credit, because when they are availed credit, they will be required to, legitimize a lot of their business operations like KRA registration, business registration permits, having some semblance of a business plan, some systems and procedures to implement in their businesses to work as controls. So this was again a huge problem. And going ahead, we should be looking at removing these curbs. Even right now, I'm hearing that there is some form of, control over the loan pricing. The SMEs should be able to access money at the rate at which the risk is accounted for. So this may be high right now, but there will come a point when it will reduce as formality increases. And even the same businesses that access rates at higher rates right now, access loans at higher rates right now, they will eventually access them at lower rates because they will start growing and becoming legitimate. So first of all, we must ensure that the SMEs get risk-based pricing for their loans, rather than, paying 300% to Shylocks per annum. It's better to pay 18%, for example. And again, our rates are right now on a downtrend. One of the theories is that reducing fertility rates, also tend to reduce the lending rates. So fertility rates are again a product of the fertility rates are related to dependency ratios. In some areas like NFD counties, we have 200 dependency ratios as compared to less than 70 for Nairobi, which has a very youthful population. Only 3% of the population of Nairobi is age 65 and above. So we have a lot of productive youth that want money to take risks and create value and jobs and, boost our economy and, work towards the manufacturing section of the Big Four agenda.
Okay, Takar, let's dive into that formalization of the informal sector. Of about 4 million or more businesses, the SMEs, or rather informal businesses in Kenya, just under 2 million are actually formalized. And as you say, the ones that are, say, not formalized go for these Shylocks, who end up charging them way higher interests than the banks, which the SMEs say are still high. So is there a lack of information? Is there an information gap there? And what can be done to ensure that they are more schooled or more educated about these so that they can make better financial choices, so to say?
Well, as for the information gap, yes, it's there. But as I said previously, the lending to them has stopped completely from the banks because of the lack of risk-based pricing. But then secondly, for the information gap, we can ensure that our government institutions can, go out there more and, talk to people, connect with people on social media, and be ready, at the information desks to give them advice, how to create business plans, how to, for every specific business, you need a series of licenses. So they should understand the purposes of these licenses and the variety of licenses that they would need. For example, if somebody wants to start, a scrap metal business, they should know what they need to do. Do they need to get a NEMA permit? Do they need to get a permit from the police? Do they need to get a permit from the county? Somebody wants to start a food catering business. They need to understand what procedures they need to adopt. So, somebody can be able to walk into the Kenya National Chamber of Commerce and Industry and get all this information from knowledgeable staff. So it's key to have the knowledgeable staff available. Secondly, it's key to ensure that they know where to go, because many of these people don't know where they should go for this information. Mm-hmm. So KNCI, Kenya National Chamber of Commerce and Industry should ensure that they go out there and become visible to the people. The people should be knowing where they should go for advice. Kenya Association of Manufacturers should also go out there and get to interact more with the youth, have some forums, even if they charge a nominal fee for the cost of the event, it's still something that people would be willing to attend to learn more about how they can create value for themselves and their families.
Mm-hmm. Thakar, let's move away from the businesses and now talk about the individuals for this year, the financial planning for this year. Many households had to adjust their budgets last year because maybe one person or two people in the family lost their jobs. Also, there was quite, you talked about the collapse in consumer spending. You only spend on things that are essential, so to say, so that you can survive through the period that there was with what you have at the moment. What can, from the lessons that we learned in 2020, what can be taken into 2021 as individuals now plan their finances for the year?
First of all, every individual should have an objective. They should think about where they want their lives to go. In the next 5 years, they want to be employed with the same organization, but at what level? Do they want to go ahead, or do they want to start a business in the next 5 years? And do they know what business they want to start? Or perhaps they have their eyes set on a larger organization. Whatever the case is, they need to prepare capital for themselves, whether it's through a transition period where they are unemployed, that the capital will help them, or whether that capital will help them when they want to start a business. So first of all, a person, say, earning 60,000 net, they need to think about how much they can set aside. And perhaps they may need to make sacrifices for setting aside that money. Instead of eating out once a week, they may need to eat out once a month. But those sacrifices are essential for long-term goals. So at that point, we realize that some of our money should be put aside if we want to succeed in the long term. And there is also how we put aside our money. Now, if you put your money aside in a saving with a very little amount of, like, say, 4%, this type of money is usually when you're setting aside some funds for a vacation. Say from February to June, save up for a vacation you want to have in August. So that type of money can be put in a savings account. But if you're looking at number of years, then you can in a variety of instruments to a variety of proportions. The first entry point can be money market funds. Mm-hmm. Money market funds are CMA regulated funds that pool together money from different investors and invest them in a variety of assets which are low risk, like bills, bonds, cash and cash equivalents like fixed deposits, and give a higher rate of interest than T-bills, but lower than T-bonds. Mm. So the rate can be above 9%. And when you take an inflation rate of about 6%, I think 9% is good for retaining some form of purchasing power on your savings.
Right. Mir Thakar there, he is an investments analyst from Mombasa, and he's been joining us on Zoom. Here we are talking about matters investing, saving, as well as financial planning for the year 2021. Remember that if your pockets or your income was slammed last year, this is a new opportunity. There could be some coming in, and what can you do to ensure that you maximize? If you had money at that time as well, what can you do to ensure that you don't repeat the mistakes maybe that you made when you were when you're doing your financial planning or management for the year 2021? And allow me to rope in David Kingo. He is an investments analyst here with me in studio. Thank you for joining us, David Kingo. let's talk about the savings culture of Kenyans. Of course, Takara there has said that Kenyans or individuals need to have an objective even as they plan for the year, think of how much to set aside. They're at setting something aside. There has been a challenge that Kenya's saving culture is pretty low. Why is this, and what can be done to remedy the situation?
Thanks for the opportunity. Just to mention about the saving culture in the country, basically is because about the investment that financial institutions have done on saving drivers. What do I mean by saving drivers? When you want to put your money maybe or rather you just want to get a loan, there are so many options for you to borrow rather than for you to save. There are many options that someone can consume their income rather than the option that someone can have to save. So it means financial institutions have really invested on the saving drivers and the consumption drivers, meaning the culture of savings among Kenyans definitely will be lower. And in the recent past is when we've seen government even trying to sensitize individuals on saving options, even like treasury bill, treasury bonds, money market, savings account in commercial banks. So it's about financial institutions that link to the consumers, to the people in the country, to this economy, calculate a culture of saving and create more options for people to save. That one would really eliminate the issue of first consuming before you save. Because what rationally should happen that you first save, then you consume later. But rationally what happens is that people first consume, then save later, and which by the time you realize you don't have anything that's left for you to save, money is already exhausted and you have to wait for the next time you're getting the money so that you can save. And of course that one creates a miss in the culture. Yes.
When you talk about now more people depending on consumption and then now they save later, and also the financial institutions enabling this culture, so to say. Is it more beneficial for the economy in general for people to have a saving culture or to just consume first and then save later?
Of course, the biggest driver of economic development is a saving option. So when you save, it starts with saving. When you save, you're able to invest. When you invest, you're able to earn an income that you can now use that particular income to grow the economy. So it's not essentially anything good that we can be proud of having a nation that is financial institutions are geared towards consuming and pushing people to consuming. Definitely it's a miss to the economy because it should first start with saving. Because when you talk about economic growth model, you first save, then you invest, then you consume later, whatever you earn from that particular investment. So it's not anything that we say it's good for the economy. So we should first save. Then the conversation of consuming more will come later after you invest and you have an income. Yes.
Sakar, if you can hear me there, do you agree with the sentiments of Kingo?
That the advertising of saving methods is quite low as compared to the advertising of, quick disposable loans. Because, quick disposable loans are giving very high returns to the investors, well as, products that provide savings are giving very low returns. For example, the money market fund, 13% for the owners of the business, but the investors get 9%. So the difference is, 200 BPs. So on 100 million, they can make, 1 million, 2 million. In
Thakar, there seems we've lost you for a second there as we fix our signal with yours there. Kingo, if you could just take Kenyans through maybe some options that they could have for this year, as they even save this money. Where can they put it that they can make more money, more interest, and just how can they ensure that the money that they're putting somewhere is, gaining the most for them?
When it comes to saving and the saving option that might be there, that someone can explore, we'll categorize them based on the amount that someone wants to save. So if you want to grow your savings, you are not saving. Your intention is to grow your savings.
Okay.
Meaning that you small amount of money that you want to save for a certain duration of period so that you can have it it will be about, you have saved an amount that you can really invest somewhere and earn an income. So we first tell this person that first take your money to even a commercial bank. So you have fixed deposit account that you can fix for like 6 months or 9 months. When you put your money there, small amount that you want to grow your savings, by the time it hits your target. Now, for example, you had said, I want to save for 6 months to have around 500,000, for example. You can even come together and say you want to target this particular amount. So after these 6 months, now you can evaluate. Why did I say you put your money in a commercial bank savings account? Because one, the interest is low. So the objective will not be the interest that you earn there. The objective will be to have a secure channel that you can easily put your money. After 6 months, you withdraw and say you want to go and invest. So once you get your money, evaluate your need. Will you need this money in the short run, or will you need this money in the long run? So if you are sure, based on how you structured your income, you not need this money anytime soon, so you now discuss within yourself or within your group. The longer the term of investment, the higher the interest. The shorter the term of the investment, the lower the interest. So if you now want to push your money for like 1 year or 2 years, you can discuss about treasury bills, treasury bonds. You can go even into money market and say that these institutions that are regulated by CMA, the way we have institutions regulated by Central Bank of Kenya that we call commercial banks, we have institutions regulated by CMA, Capital Market Authority, that are called fund managers. They can sit with your money for a longer duration of period where they will earn a higher interest. So in that particular way, you are able now to sit back and say, I saved 500,000, I put it in an investment program that runs for 2 years. By the time the 2 years hit, of course it was long term, so the interest will be higher. You will have, for example, 100,000 on top or 70,000 on top of that 500. So at that particular moment, you will have decided, what do I want to use this money for that particular time? So you will draw. Then number two, there is this person who already has some large amount of money they want to invest. So, or rather saving, because saving and investment may be tied up. You can save your money so that you can earn an interest on that particular money. So you're already investing. So there are these people who already have these large amounts of money and they want to invest. So number one, you have to ensure that you have a secure channel of investment so that you don't give someone your money and they want to gamble with it. So by the time you need it back, you're not able to get it. So we will advise these people, see options about government investments. The interest rate might be relatively lower, but the longer the term, the better the interest rate and the security. So you are able to put, for example, your 5 million in a treasury bills or bonds that might take time, but your money, you're sure it is secure. Number two, you can go into the money market institutions or fund managers and say, you wanted, for me, I have like 5 million that I want to invest. So understand what these fund managers do before you put their money into their account. Do they have underlying security just in case the business don't work out, you are able to get back your money if in case they dispose their asset. So once you understand the stability of the institutions where you want to put your money, now you can put your money and say, I want this money to remain here for 1 year. So by the time 1 year ends, you already have your capital and your interest earned that is relatively secure, and you cannot sit back and regret that I put my money here, and by the time we hit 9 months, these institutions can no longer promise to be paying my money back in a 3 months time.
Okay.
Yes.
Well, Thakar, I hear you're back. Let me bring you back to the conversation. We are talking about the options that there are for investment this particular year. He has talked, or rather Kingo has talked about putting the money in commercial banks. There's also the treasury bills and bonds, as well as fund managers. And he has mentioned something about ensuring that you have a secure channel of investment. Could you just speak to a Kenyan who is listening and wondering, how do I identify a secure channel to invest in?
So first of all, government papers like T-bills and T-bonds are almost 100% secure because theoretically speaking, the government can always print money and pay you back, although the purchasing power of that money is questionable now. Bank fixed deposits are relatively secure. A person should look at the reputation of the bank. You know, if you go on a channel like Twitter, for example, and you just search for the bank name, you will see a series of complaints about the bank. Then you look at those complaints and, you know, think about it. Are these complaints that's quite normal in the industry? Then you can do a Google search as well. And this also applies to the money market funds. So once you have done these, what you call sort of preliminary checks, you can even go further ahead. And as for money market funds, you can go ahead and, check the board of directors and even do Google search on the quality of the managements. Are they mentioned in some adverse events, or perhaps are they mentioned where they shouldn't be? But the good thing about money market funds is your funds are separate from their underlying business because they are managed by a custodian, or rather held by a custodian. So only the investment decisions are made from the money market manager. So this, again, is something that's positive in this regard. But many people think that money market funds are completely risk-free. No, they aren't, because these can invest 20% of their portfolio in corporate bonds and even 40-50% in bank deposits. So, the underlying companies where the corporate bonds have been issued from, as well as the banks where the fixed deposits are held, are also businesses, and businesses are prone to failure. So you have to consider this as well. So the best strategy is to diversify. And right now we are just talking about safe investments, or rather I'd put that in quotes, safe, because nothing is 100%. But then again, you can also look at higher risk investments like stocks. And stocks can give massive returns. But you have to understand as well that they can go down 40-50% in a single year without any reason at all. Like, for example, a company like Kenya Re right now, it's reporting huge increases in profits, and it's trading below its cash per share. This is unbelievable. So some of these unbelievable and irrational things happen in the stock market. A person needs to have the patience to sit through such turbulent times when sentiment is at lows, resulting in stocks declining to unprecedented and illogical levels.
I think that's a very good point to note there about the higher risk, that is the stock markets. There are higher risks, but also the losses could be massive in case of that downfall. Well, just to pick up on that, Thakar, could you mention any red flags that people need to watch out for when they're looking for these particular investment opportunities? Because, as you said, there are higher risk, or rather investment options such as stocks, but someone might say that the higher the risk, the higher the return, which is actually true. But are there any red flags that should tell you not to venture into something?
First of all, investors really fear management issues when it comes to stocks. For example, you see a listed company being mentioned in a corruption scandal, or, for example, you hear that sacked the CEO, who will almost equivocally see the collapse in the share price, even if the company is doing well, because investors start fearing that the books do not reflect the actual substance of the business. So now at that point, some people may opt to cut their losses and sell. Other people may wait for the stock to bottom out if they do indeed believe in their management and, sift through the noise from the media. Then they may actually buy more on their stock portfolio, because when you buy more stocks at a lower price, then you can average down your total aggregate price. And once the market starts recovering, you get to be in the recovery from a lower point rather than the higher point from which your stocks started falling. So this is one strategy of dealing with losses in the stock market. The second strategy is rather than investing more in a company that's falling in price, you look for other companies that are falling in price due to macroeconomic issues on the whole, like the COVID-19 pandemic resulted in a total decline in the entire, and investors who bought Safaricom at, say, 27-28%, they are now sitting on, 6, 7 shilling gains. And this is a company that, it has a very high return on equity. And, tech is currently favored throughout the world. Everybody is looking at companies with, even a remote association with tech. And Safaricom is doing literally something that's bringing more Kenyans out of poverty. So this is an interesting company, but again, we have seen unprecedented decline in the share prices of banks, which were previously the so-called blue-eyed boys of the stock market. Mm-hmm. So banks again start looking attractive when you realize that, say a bank like Equity Bank increased their loan loss provisions by 8 times to 14.8 billion. But if you take provisions and say they just doubled in Q3 2020, rather than increasing 8 times, then Equity Bank increased their profits by 24%. So in your mind, you already see that the problem was the loan loss provisions. And once they've already done that in 2020, going forward, these provisions are likely to decline, but the earnings keep rising. So some investors have started buying the stock from 28 to 35 they were accumulating, and now it's over 36. And who would know, soon it will be above 40. And they may even pay a shilling in dividend, who knows, despite the negative sentiment on banks paying dividend.
Mm-hmm. Right. Thank you, Thakar. Kingo, if you could just add or maybe have something else on the matters of the red flags people should watch out for when they are looking for investment opportunities, kindly.
Oh, I just want specifically on the stock issues because I, as a person, I trade in that. So sometimes when you buy stocks, you should have an objective. This is the much I want to raise from this particular stock. So the moment you hit your target or the share value has hit your target, definitely it's high time that you withdraw. So the moment, because you might have said you want to bought some shares at 30 bob and you want to sell them at 39. So when they hit that 9, then that was your initial decision, then dispose. So immediately you see a change, that they have come down by a certain percentage, either by 50 cents or by 1 bob. It is a high time to withdraw. Anytime you hear about a downfall in the share value, definitely you withdraw. The other option is about getting to understand before you put your shares or you buy your shares in the institution, as he mentions, understand the management structure of that particular organization, and also understand how the market, or rather the economy is trying to affect that particular organization. Because just as you talk about commercial bank, the provision definitely would have hit the commercial banks highly negatively. So definitely to understand how the economy is behaving regarding those particular institutions and have an objective. You want to sell these shares when they hit a certain price. So by the moment they drop by 1 bob, you get out. Yes.
Right. Well, Kingo, this conversation will continue in a little bit. We are speaking with David Kingo, an investments analyst, as well as Amir Thakar. He is an investments analyst as well, joining us on Zoom from Mombasa. We are talking about matters financial management for the year 2021, be it a business or an individual that has to be done for this year. This conversation continues in a little bit, but first we take a quick commercial break. Stay with us.
Kwa mfano ndani ya matatu
yaani mtu mzima na miaka zake, hizo miaka zote mtu ajui kujua kuandika note tu peke yake
Nauliza, ni bwana?
Don't you dare insult me, okay?
Mama Angel.
Let the dead bury. They are dead, right?
Haya, kwani umepita? Ni nini wewe? Yaani wataka kumpiga? Huwezi mpika, umpige nini?
This weekend on KBC Channel 1.
Wiki hii kwenye Mkulima tutaangazia upanzi wa mimea mbalimbali.
Natumia teknolojia because mimi si mkulima ule wa kawaida. Nilikuwa ninaishi pale Nyahururu. Mama yangu alilima kama watu wa kitambo. Na nikaona hiyo either inavunja mgongo, inapata akona changamoto mingi sana. Lakini mimi ninataka kulima kama biashara.
Kisha tukuze pojo katika maeneo kame.
Dengu zinaweza fanya vizuri hata ukiwa na mguu kidogo ya 300 millimeters per season. Actually unaweza unwezi ukakosa kitu ya kuvuna wakati unakosa kuvuna mahindi ama hiyo mimea nyingine.
Basi usikose kujiunga nasi Jumapili saa 9:30 hapa KBC Channel 1 kwa mseto kamili wa kilimo.
Two lionesses struggle to cohabit.
Because I'm not going to stand here and be compared to some. Hey, Nancy, don't try me.
As the coastal vacation brings Nancy and Joe closer.
Nancy, you are full of surprises. What would you like me to do for you this morning?
Or will it be?
Now, can you give us some space? No. He? Ni usherati. Watch your mouth, Mother Teresa. Or what?
This game that you and Nancy are playing.
Na nyinyi mmekuwa akina nani kuingilia mambo ya wazazi wenu?
Stringed, making a comeback. Hotter.
Just gonna stand there and stare at us?
How do you think things will end up here?
This is a conversation between your father and I. Sometimes it would be good if you just stand your ground.
Wewe mtoto, wewe. What happens between me and Mama Paul is none of your business.
You know Mama Paul is leaving you.
So what?
What? I'm done being a puppet and dancing to your tune and manipulation. We called the clients and told them that the project is done.
Only on KBC Channel 1. Fridays at 8:30 p.m. This weekend on KBC Channel 1.
I know you are jealous because he has it better than you. Maybe it's high time you also need to look around for a seat, eh? Your jealous is becoming too loud.
Quit your unsolicited advice, but you should remember that Queen A has it all under control, or otherwise. Dude.
I think sane men should stay single for the rest of your life. Kinyanjui, what do you say?
Through my brother.
Hyena and Ngoda now of lanes. Wonders shall never end.
Who are you calling hyena and God? You small person. Stay out of my life.
Bara, you better start talking.
Hey, what do you mean? We were going to talk anyway.
Classmates, every Saturday on KBC.
Thank you very much for staying with KBC Channel 1. This is BizCheck here, and we are talking about matters financial management in the year 2021. I am with Mir Thakar, an investments analyst who is joining us from Mombasa, as well as David Kingo, who is also an investments analyst here in the studio. Now, if you're just joining us, we've talked about quite a number of things, including the savings culture of Kenyans, as well as the investment opportunities that are available for you. Now, let's talk about the environment that we are in right now. Kingo, let's start with you. The micro environment that there is, does it support this saving culture or someone's, say, ambitions to save and invest this year?
Of course, when you talk about savings, mostly the options of saving happen when the economy is quite low, just like we're speaking. Because the strategy that will be there by the government and the private sector will be to grow to grow in terms of infrastructural development, to grow in terms of their investments, to grow in terms of business. So basically when you buy, for example, just give a layman's example. When you buy a share now at this particular time, of course they are low because of the economic performance, the business performance currently. But in the near future, of course there will be injection by the government, a lot of strategies to grow the economy once more. So of course the share value will rise up. So it's a high time that people can focus on savings and putting aside what they have and invest, because in the near future the economy will grow, and basically the value of whatever you bought at now will be higher at that particular time, rather than wait and try to save when the value of saving by then will be high. So you need to take advantage of that particular margin.
Right.
Yes.
Well, Thakar, if you can hear me, what do you say about investing now when things are pretty bad, so to say, in the economy?
Betty, I think we have been in a secular bear market. A bear market is a market in which prices of the shares are consistently falling. So we have been in a secular bear market since 2007, which means that although the market has risen and fallen throughout that period, it has not regained its 2007 high. And on a more recent scale, from 2015, we've been in a bear market where the NSE 20, which is an index that tracks 20 of the most popular stocks on the Nairobi Securities Exchange, has been also on having declined, at least 60% from 2015 peaks. So we actually hit a low in 2020, which was a 17-18-year low for that particular index. And then we have begun a gradual recovery on low volumes. So this is the accumulation phase. The investors are accumulating shares, and they are looking towards the future. They're looking towards recovery, which is, undoubtable, will happen. But it may be, not to the extent that the World Bank forecasts. For example, the World Bank forecasts that Kenya will be the fastest growing economy in sub-Saharan Africa for 2021, growing by 6.9%. And some others like Moody's Investor Service forecast a growth of just over 4.5%. So there are these, different ends of the spectrum for the recovery, but the recovery is no doubt happening because tourism has already begun gradually. We are seeing tourists coming in, and the education sector, which accounted for most of the drop in the contraction in GDP last year, has actually regained full activity. So this education sector will also account for a lot of the recovery. And we are hoping that rains are at least sufficient to boost our agricultural sector further. Our economy is heavily dependent on agriculture, so everything depends on good rains. 34% of our GDP comes from the agricultural sector, and more of this is actually also attributable to the agricultural sector because of the velocity and, the multiplier effect of money. So these two factors are quite important: rain and the extent of the recovery. And secondly, we would also like to see some semblance of economic recovery strategy from the government, methods to try and boost companies, increase lending to the private sector, cut down on bureaucracy, ensure that entrepreneurs can do business freely without intervention from, for example, political interests or something of that sort. So these are some of the factors that will represent the extent of the recovery that we hope for. And for the stock market, we have definitely hit some really, really disheartening lows last year. But considering there's occurring right now, 2021 looks quite bright in my personal opinion.
Right, 2021 looks quite bright according to Thaka's opinion. Kingo, he has talked about those recovery drivers, so to say, the agriculture sector, the reopening of the education sector, as well as, of course, 2022 is a political year, or rather election year, and the matters of political stability are, of course, very important. Is there more that the government can do to ensure that the environment is business friendly?
Oh, definitely. What will happen between now and June before we read the budget is very material, and how the government is going to manage political instability. And then once we read the budget, definitely we hope to see a budget that is geared toward money supply. And when you say a budget that's geared toward money supply, is a budget that is supposed to put money into people's pocket, and have investment structures or even development agendas as trying to touch every sector of the economy. So then after that, definitely will be in a heated political time. So the stability that the president is trying to promise, definitely they know once we have unstable politics, then definitely we have to go back to square one. So we'll not say, we'll even be having a conversation of what would have happened even before COVID-19. So we'll write off 2019 and we write off 2020. So we hope we shall have a very stable political structure, because once it is unstable, definitely whatever impact we'll have gained between now and June will be written off. So definitely it's supposed to be on how the budget will be, and the stability of the economy. Definitely that one will determine a lot in terms of how we expect the economic recovery strategies to be. Yes.
The 2020 changed the way the world really does business, and there are some sectors that, despite the closure of others, there are others that really gained from that particular pandemic, including especially the digital sector or the tech sector. Do you foresee more investments in this sector to continue supporting the recovery of the economy, both locally and internationally?
Okay, basically it depends with the contribution to the GDP. So based on how much technology will bring to the GDP, definitely determines how much allocation will be given. But what I see mostly is the government way forward will be on the big four agenda. Of course, they are still running, and agriculture will be a key aspect they're going to fund a lot. Because our economy, as we had my friend mentioned, that 34% comes from agriculture. So once we don't have food security, definitely we are going to be strained across all sectors. Even the investment and saving that we're trying to mention here, they are based on something called disposable income. The income that remains after you've done taxation, after you paid all your particular bills, then you can now say, this is the much I can have to survive. So once the cost of food goes higher because agriculture is not stable, definitely we're going to lose a lot as an economy, and even savings will not be material. So it depends with how much technology is trying to contribute to the GDP. But the key economic drivers in this country were affected. So when you talk about agriculture, you talk about food security, you talk about tourism, we talk about infrastructural development. That's the angle that the government is going to look at. So technology might be beefed up, but more of incentives for it to grow and to be a measurable factor in the GDP.
In the GDP, yeah. Right. Thaka, what do you foresee are the sectors that investment is going to go, or rather investors are going to be looking at this year?
Saying that tech will be a particularly interesting sector because of Nairobi's youthful population. The urban population actually is quite youthful, and with low dependency ratio, and people are just getting the hang of formal employment. So that's a sector that will be interesting, targeting domestic demand. But also we have manufacturing. The president will be intent on increasing investment in manufacturing this year, considering that he is reaching his term limit. And this would mean that they will actually bring more people into electricity tariff areas like Olkaria Industrial Park, so that they can manufacture at 5 per kilowatt hour. And also there is a provision for some of the very high consumption manufacturers to manufacture at 7.5 per kilowatt hour. So I would think that the president would look at, maybe agro-processing, because our economy already has ample supply of agricultural products. So that would be something you would look at. And then, with those concessional tariffs in certain and foreign consumption, there will also be potential to invest in a wide variety of different ventures. In fact, I'm also seeing the potential that we will soon have announced that somebody has set up for manufacturing coronavirus vaccines. So the variety of investments will be quite massive. Like last year, we saw that our investigations spearheaded local manufacturing of PPEs for the medical workers against a pandemic. So these three sectors are actually quite interesting. Tech.
Well, Takar, we seem to have lost you there, but he was talking about the sectors that are going to be receiving quite some investment from the government as well as other investors, including the technology sector. He has talked about manufacturing with a focus on agro-processing to ensure that the agriculture sector is tapped to its maximum, considering really it is the driver of Kenya's economy. Kingo, what are your views?
Of course, I echo his sentiments, but what the government has really invested a lot in the recent past is developing of our infrastructure in terms of roads and connection networks. Basically, they have an objective. Because once you want to focus on manufacturing and food security, you cannot produce food products that you cannot sell to the market. You can't reach the market. So they are trying to develop roads so that people can easily access the market. Once we have good roads, also the cost of transport gets lower. Once we have XDR, the cost of transport gets lower. So in that particular way, you are able now to focus on manufacturing. And we're on the tail end of the infrastructural development that the government has been doing. So what next the government focusing on will be manufacturing, agriculture sector, and I say there will be incentives for technology because we're still in the traditional production methods as an economy. So we still have incentives, as you said, even the government has said, even on the processes that the government that we citizens process our document through the government. So they are saying there will be now use of technology in accepting some of the processes. We've seen even the judiciary going online. So those are incentives that they are trying to put across so that people can now understand we can still have some efficiency in using technology. So once, because we, as I mentioned, on the tail end of infrastructure, the next aspect will be on manufacturing, agriculture, and food security in the country. So we expect a lot of funding on that particular aspect. And once we have manufacturing rising up, we have agriculture rising up, even commercial banks, because people will consume less on food, because that's the biggest contributor of our inflation, then there will be now savings and investments, and you will see financial institutions even trying to stabilize. Yes.
Right. Even as we talk about now the budgeting process for the year, one big challenge that the government faces is, of course, the debt that has been ballooning. There is also the inclusion of some 3.4 trillion that was now added to the 7 trillion. That closely says that we have already hit our debt ceiling, really. What can be done to ensure that this challenge can be really surmounted?
I think what number one got the government off guard was the COVID-19 issue, because most of the debt payments that will come from tax collection, because all this money that is being brought in terms of debt is used to spur the economy or to trigger economic growth, and people, because of what you call the multiplier effect, people are able to invest. And I just want to give a layman's example. By the virtue that the superhighway, the Thika Road, was constructed, people were able to open new businesses. These new businesses were tax avenues for the government. So if there was a debt that was supposed to be paid, the new businesses would be new income that is able to fund to service this particular debt. So when you look at all this, you try to understand that because the government wanted to trigger the economy through this particular debt, but now COVID-19 came and people did not invest as expected. The taxes were cut, pay that was reduced, and many tax options that have been reintroduced in a different way, but the net effect is that tax has been reduced. So the government is going to get a challenge. I thought that we're having a discussion where they are going to have the debt management strategy, where they're saying we're going to change our loan portfolio from US USD to euros. They're trying to even to argue about, can we extend our term loans? So they're going to buy time so that they can stabilize. So all these are structures that the government is trying to say, we borrow these particular laws so that we can trigger our infrastructural development, or that we can have a multiply effect, and then we're able to get new tax avenues. So give us time so that we stabilize and we are able to pay these taxes. However, I'm sure the government, based on the debt recovery strategy, the management strategy that I saw with the CS, we're still not out of the curve in terms of managing the same. Yes.
Well, Thakar, I hear you are back. We are talking about now a challenge that is going to, say, affect government's planning of the finances this year. That is debt, the debt that has been ballooning over the years. And now with the challenges, it's really a catch-22 situation. You want money from the public or from Kenyans in terms of revenue, but at the same time, Kenyans are looking up to you to ensure that you put money in their pockets. That's up to the government. What are your views on even the debt suspension that was announced the other day by the CS in charge of Treasury? The Paris Club and Kenya signed an MOU of about 36 billion just being postponed, the payment period for the next 6 months or so. They're also seeking a further about 40 billion from the G20. And these particular efforts that are being put in place by the government to ensure that they delay the loan repayment, do you think they will suffice?
Well, Betty, I don't think they will suffice, because, you know, when you have a relief of about 70 billion from 500 billion, then, you know, it's not really going to cut it. But, you know, that money can actually be used elsewhere. So in that way, it can help. But that money will actually have to be paid eventually. So it will be rolled over in the debt. So in my opinion, it will help with the cash flow of FRCs, but not overall in the debt situation, because our debt is, you know, it has grown really. We have been running budget deficits of 8% and even over. So our debt has actually grown from 1.7 trillion in 2013 to 7.1 trillion as at the end of September 2020, and that's over 320%. And over that same period, nominal GDP, which is, real GDP is more important. It's grown by just 40%. So yes, our debt is also a product of our low savings culture, because, you know, the government does have to invest in infrastructure projects, but a lot of it has to come from, you know, the domestic markets as well as the foreign markets. So as well as crowding out the private sector, it also further exacerbates the lack of money going towards entrepreneurs by crowding out the private sector.
Right, Thakar, as you've put it, your opinion is that this effort will not suffice. Is there more that can be done to, say, better the situation, considering the debt hole that we already are in?
Not much can be done, because such loans have to be repaid. What we can do is to, you know, try and maintain our spending so that it doesn't, you know, keep rising. Just maintain it at a manageable level. Of course, a larger and larger share of our spending then going towards debt, because the interest costs pile up and even the debt repayments pile up. So that will be a problem, but what we can focus on is on growing our economy, you know, bringing more people into the formal sector, cutting the bureaucracies, making the business environment more favorable for all categories of entrepreneurs, ranging from the huge corporates all the way to the small SMEs. And, you know, of course, that does not mean we target everyone and anyone for more tax revenue by, you know, arbitrarily raising the tax rates or, you know, different forms of taxes in every budget cycle. But it does mean that we attempt to bring more informal sector employees and workers in the sector. And the best way to do that, as earlier mentioned, is to increase lending to the informal sector.
Increasing lending to the informal sector. Kingo, do you agree with this? And maybe to follow up on that, KRA, the Kenya Revenue Authority has been missing its collection target for years now. What do you foresee for, say, this past year? They already said that really they were dented, and even the tax relief now coming back, or rather the taxes coming back, that tax relief being removed. What do you foresee for this year?
Of course, when you talk about tax collection, the failure sometimes is on the KRA part, because the structures for tax collection, they're not there. So someone who is doing business of a butchery in the village is similar to a person who is doing any business here in Nairobi. So the way someone doing business in Nairobi has ability to pay taxes should be the same way someone in the village should have an ability and avenue to pay tax. So when then the person in the village is not able to pay tax and they are willing to pay, so it means the issue is on the tax collector. So they need to increase the mechanisms of tax collection. Number two, when we talk about lending to trigger the economic growth, we have an issue here. So government doing domestic borrowing wipes out money that is available in the commercial banks for individuals to borrow. And that one really messes the economy. And when you remember the issue of interest capping, people are not able to borrow. Then we moved to COVID-19. Of course, business collapses, and the ability to have new business has reduced definitely.
Right.
So what we say here is that if, for example, in 2013, someone was able to borrow a loan in a commercial bank and they were given at 20%, this person 2020 or 2021 cannot be given the same loan by a commercial bank at a lower interest rate. So meaning the commercial banks are focusing on something else. Whenever it is viable, wherever it is, it's an option for commercial bank to put money in treasury bills and bonds, instead of giving that money to individuals so that they can start businesses, then what happens, something we call the crowding out effect. The private sector is crowded out. So we need government to have more incentives to push money to the individuals by doing more association with commercial banks and telling them, we need you to give loans to this particular individual. We need to understand your loan book. We need to understand your core business. We need to even to cap the amount of money that you put in the government investment, so that we can have people be given the ability to borrow, because that's the only way you can circulate money in the economy. It's the only way you can push economic growth even to individual people. Because if someone wants to start, for example, a salon in the village that can be able to pay taxes, and they are not able to start this particular business because they don't have capital, when they go to a commercial bank, they're told, we can't give you money because we don't understand your ability to pay. So that business is stopped, and KRA can never collect tax from that particular business. But when they go to commercial banks and they're told, we have this particular incentive where we are giving loans to individuals who want to start small businesses because the government has cushioned interest on this particular facility. So you're able to get your money, you start your business, you pay your loan, and the government collects its taxes. And that is what we call economic growth in a nutshell.
All right.
Yes.
Well, this conversation will be continuing in just a little bit. We'd like to take you to the courts now, at the Milimani Law Courts, where a case on the loss of 1.9 billion Kenya shillings in the Kisumu oil jetty is going on. We want to listen into those proceedings. The case is against former finance manager Samuel Odoyo, as well as former infrastructure development manager Billy Aseka, as well as the KPC managing director Joe Sang, among others. Let's listen into those proceedings.
Some money annually. But having said that, all parastatals, when they submit their budgets to Treasury, Treasury requires that we review and support the budget or not before submitting to National Treasury.
So in terms of budgeting, your ministry is involved
in terms of supporting the budgets that go to the National Treasury for these corporations?
Yes, once they are approved by the board.
They are approved by the board.
Yes, sir.
That would be the respective boards of the
State corporations.
Now, coming to the matters before this court, I would like you to kindly tell us, in respect to a project known as Kisumu Oil Jetty that was undertaken by Kenya Pipeline Company. Now, did you have any engagement with Kenya Pipeline Company in respect to this project?
Yes, I did.
In a nutshell, what was the nature of the engagement?
Like I said in my opening remarks, one of the things that the ministry does is oversight the parastatals for that they perform the strategic intent of the government. And in this case, we had been to a meeting of the Northern Corridor, Heads of State Summit. And it was agreed that lake transport would
During the Head of State
summit.
When?
It was June 2016. When was it? Can't remember exactly. It's in my statement.
I would like to refer the witness to his statement.
Yes. Thank you. It was in 2016 June that lake transport should become a priority to reduce congestion on the road.
That what transport?
Lake transport. Your Honor, what had transpired for this to happen was the Uganda government had complained about the many roadblocks in Kenya and was, as a result, said that it was increasing the cost of their goods. So lake transport was then suggested to be a way in which we could mitigate these costs.
Well, that is the Petroleum and Mining Principal Secretary there, Andrew Kamau, who is giving her witness statement concerning the case on the loss of 1.9 billion shillings in the Kisumu oil jetty. The case is against the finance manager Samuel Odoyo, as well as the former finance manager Samuel Odoyo, former infrastructure development manager, as well as the former KPC chief executive. And Sarafina Robi is on the ground and will be bringing us that particular report in our subsequent bulletins. We now move to the Pan-Africa Hotel, where the Institution of Commission of Jurists is just having a presser there on their views on matters, the Building Bridges initiative. Let's listen into that.
Effectively, a new funding mechanism for RAMCA globally. Little is known about GFF by most stakeholders, and yet it's a very important key player in REMCA. So for us to hear this background, all the information about GFF, we'll have to invite Dr. Malatela. Oh my God, I'm so sorry for saying it wrongly. Malatela Tuonane. I'm so sorry, Dr. Yes, who is the GFF coordinator, the GFF Secretariat Coordinator. Karibu Daktari, and let me apologize for misspelling your name, and you can invite Joyce after that. Karibu.
And honorable delegates, ladies and gentlemen. Can you hear me well? Okay. Good morning, and apologies for the chair. And my name is Maritela Tuani. It's pronounced Tuani, not Tuani, as many people
by the International Commission of Jurists, and they are giving their position on the Building Bridges Initiative report and the proposed constitutional amendments. Of course, there is a process that will be ongoing, and Safina Ching will be bringing us the details in a little bit. Here in studio, we have David Kingo. He is an investments analyst, and online via Zoom, we have Mir Taka. He is also an investments analyst based in Mombasa. We have been discussing financial management for businesses, for individuals for the year 2021. We have had a recap on what transpired in 2020, as well as what you can do to ensure that things are looking up in 2021, as well as just what the government can do to ensure that the business environment is tick for business this year. And before we joined our reporters on the ground, we were talking about matters revenue collection. Remember that even as the government is trying to get a revenue from the country or from its citizens to run a daily government operations as well as infrastructure development, there is also the need for the government to put money in Kenyans' pockets. David Kingo, before we joined our reporters there, could you just give us a recap of what you were saying, please?
Oh, definitely. What I'm mentioning is that how the government is trying to put money into people's pocket is a key issue. And remember, the last year budget was about money supply. We heard about government talking about youth employment, that we've investment funds being pushed to where people can go into invest and some income out of there. So the same way we are going to have an option of money supply through commercial banks, and that's where the government has really failed. Because when you look at in the few years ago about interest rate capping and government borrowing locally, what do we mean by when the government borrows locally? It means that we have an incentive whereby commercial banks are able to place money in government bonds and securities. This money should have been used to lend to individuals, and that's why I gave a scenario how the economy is run and what is economic development, what is economic growth. So if, for example, you're an individual and you want to open a business somewhere, so you need some capital to start this particular business. So you go into a commercial banks and ask for a facility, then they tell you you're not able to give you this particular loan because we foresee inability to pay that particular business. Therefore, the environment of doing the business is not okay. So your business might collapse at some point. So you're not given this particular money to go and invest. So what will happen is that if you started this particular business, of course you have earned an income where the Kenya Revenue Authority would come to tax and get their own income. But what has happened, you've not been able to start this particular business because you do not have access to credit. profit. So of course the Kenya Revenue Authority will not collect these taxes, and that's why we call it the crowding out effect, because the commercial banks are trying to push money because it's more secure with the government rather than giving it to individuals. So the government need to refocus on that and push commercial banks to lend to individuals, because that's how we supply money in the economy and people are able to start their own businesses. When you look at this COVID-19 period, people have been strained. Whatever they had saved basically to invest in the future has been used for consumption. So the only way we can trigger this economy is trying to look in different ways that we can put money into these people's pocket, different ways that we can have conducive business environment, different ways that we can have low cost of starting business, different ways of spreading our tax structures, that we don't press individuals that want to start businesses with taxes rather than give them some tax holiday to come and pay taxes in the later date. So it's all about incentive that will put money in people's pocket, because that's where the country is trained, that's where the economy is trained. And when you do that, basically, we'll have a vibrant economy and people will invest. Because as I said earlier, if someone was able to borrow a loan in the last 5 years as 20% and be able to start a business and grow it, why are we not able to get these loans currently at 13% and still grow similar businesses? So it means there is an issue that the government needs to focus on pushing money supply through commercial banks.
Okay.
Yes.
Kingo and Thakar, just hold on for a little bit. We'd like to take the viewer back to that International Commission of Jurists presser on matters the Building Bridges Initiative and their recommendations. Let's listen into that.
Postures that can change, requiring only the political will on the part of the political class. For example, we do not require a constitutional amendment to increase the resources to the devolved counties to 35%. We don't require any constitutional amendment to include the ward allocations to 5%. That has already been provided in the current constitution. The issues about the youth are already contained in the current constitution. They don't require any constitutional amendment. They require political goodwill, which is not present or visible in the current administration. Our further analysis, we posit that the BBI report does not lay out clearly defined argument for substantive constitutional reforms as a response to measures or to the challenges which have been raised. Therefore, the proposed constitutional amendments will not be the magic bullets to the current socio-economic and legal concerns that affect the Kenyan public. Finally, ICJ Kenya reservations regarding the BPI reforms remain consistent with those taken in 2018 when the BBI process was commenced. We have not changed our process. We restate that there are currently many social, political, health, economic concerns that Kenya is grappling with, ranging from corruption, mismanagement of public funds, socio-economic challenges, poor leadership, negative ethnicity, and many others. These lingering challenges include the COVID-19 pandemic. We remain concerned that the calls for referendum should not be the priority for our country at this time. The resources should be applied adequately to ensure and reflect what the Kenyan people right now require, not necessarily ensuring the resources are going for unnecessary amendments that are not going to change the lives of the Kenyan people who require adequate and proper implementation of the current constitution. The 2010 constitution provides mechanism to curb corruption and inculcate national values and principles in Kenya. What is required is a political will to implement the Constitution of Kenya 2010 fully. In conclusion, whereas ICJ Kenya supports calls for a unified Kenya, we reject the BBI proposals on constitutional amendments in totality and reiterate that the amendments are unnecessary. The issues identified can be cured by entrenching political will, instituting policy and legal reform. What the Constitution 2010 requires is meaningful, deliberate implementation in all its core areas. We call on Kenyans to join our rallying call to the political class to implement the Constitution 2010. Tekeleza Katiba Sasa. We want that constitution implemented fully. And I want to state this as I conclude. The counties require resources. You cannot give counties resources without transferring functions to the counties. Transfer the functions and the resources will follow. And we're saying this. Schedule 4 of the Constitution 2010 provides what functions must go to the counties. These functions are still held at the national government level. We are seeing several areas where the national government is still trying to take back those resources that have been transferred to the counties. We kindly request that this be implemented fully. Then we can do a total review and overhaul of what has happened in the last 10 years and what we intend to do beyond this time. Thank you all. God bless Kenya.
The International Commission of Jurists, they are giving their views on matters the Building Bridges initiative, and they are saying that they are rejecting the BBI proposals. They demand the implementation of the Constitution as is. They say that those proposals are not necessary at this moment, and they say that the government should ensure that they transfer functions to counties and the money will follow. Of course, quite a number of views they are being given by the ICJ. Many people have been giving their views on matters Building Bridges initiative. We continue with the coverage of how that unfolds, and Safina Cheng Oma is on the ground there and will be bringing us that particular report in a little bit later. But here in studio, we continue with our conversation on matters financial management and just planning for this year. Amir Thakar, if you can hear me, before we joined our reporters there on the ground, we were talking about the revenue collection, and Kingo mentioned the matter of formalization of the informal sector to ensure that the tax net is just widened, to ensure that more people are paying taxes as they should and give more money to the government to continue running the day-to-day activities of the country. What do you think should be done to just bring these people now to the tax bracket?
Apart from my earlier point on increasing lending to them, so suggest that it's not to increase economic freedom. You know, cut all the bureaucracy, make it very easy for somebody to start a business. And of course, we already discussed that they should be able to find the business bureau like the Kenya National Chamber of Commerce and Industry, and to ask them the relevant questions and to get quick answers. But in addition to that, they should also be able to do business without interference from, say, for example, their trucks can be, you know, as long as they follow all the rules and the laws and regulations, their trucks cannot be stopped on the way, you know, in haphazard manners, and, you know, their goods suddenly inspected without reason or cause, and delays in their, you know, releases of imported goods and things like that. You know, we have to find ways to remove non-tariff barriers, not only on the international trade scene, as the term is usually used, but also in the domestic business environment in regard to, you know, seamless flow of operations. So, you know, we have a very high level of freedom of expression in Kenya as compared to other African countries, which is a very good environment for bringing about innovation. So, you know, as we can see in the US, another country which has a lot of freedom of expression, that's where we are seeing the crucible of tech innovation. So this is a very good environment to innovate. But then again, we need economic freedom. You know, not like you just want to, you know, play music in your matatu and you need to go and get a license for 10,000. This type of business environment is not conducive to the conducive environment that we have created from freedom of expression. So this is something that we must work on as a nation, and also the government must prioritize.
Right. Thakar, as you mentioned, the issue of just ensuring that there is economic freedom there, there is always an argument that when, say, you give the taxes, they go to the government, the runaway corruption maybe kills the spirit of Kenyans to even contribute these taxes or to be formalized in a way to ensure that they are contributing their fair share of it. Do you think that this can be remedied?
You see, the biggest problem with corruption is the manner in which our politics are structured. You see, our politics requires a lot of campaign contributions from a huge number of sources that are all looking for their personal gains. So when somebody comes to power, they have a lot of political debt to pay. And then you see all these campaign contributions that have come through, including campaign contributions that are used to give random handouts in slums. These all have to be repaid. So you see, the issue of corruption is twofold. One is, should the person who benefited from campaign contributions go against those who are then benefiting from his from those who are benefiting from his leadership, as well as those who are benefiting from illegalities that his leadership has to make the difficult decision to eradicate. And then secondly, we also have to think about the ethical construct here. If a presidential candidate or a governor candidate or an MP candidate has to give handouts to the voters, then you have to think that those handouts will have to be recovered from somewhere, and they are likely to look into either exploiting state resources or in using state permissions in an unethical manner. For example, the CDF kitty is one place where a lot of audit work needs to be done to ensure that it's not being misused to recoup campaign funds. So these are structural problems, and we need to work on a way of cutting down on all the pain spent. And this will be difficult to enforce, because how do you go into the village and make sure that somebody's agents are not giving handouts?
Mm-hmm.
So I agree that we have a corruption problem, but it's not easy to solve unless somebody ascends to the top and then betrays those who helped him ascend to the top.
Wow, quite an interesting perspective there. Kingo, what is your view on the runaway corruption in the country? The government has been doing a lot to try and, just lower the rate of corruption, so to say, and make sure that these people who are perpetrating the corruption itself are brought to book. But is it enough?
Definitely, as my friend mentions, corruption is like a virtual institution. It has its own processes, it has its own structures, it has its own key players, it has a management, it has all sets that you will have in a formal setup. So basically, fighting corruption is a key issue that the government need to focus, because of a lot of, let's say 3% of the budget can easily go into corruption and it's misused. So definitely the government need to really focus on that and kill those structures, because the amount that is lost and the derail that happens. I just give you examples of projects that we had. They have corruption, they have court cases, they have been delayed. So when you start a project, there is the completion time frame. Mm-hmm. So once you have corruption issues and the matter goes to court, then it is delayed. Of course, the completion time is extended, and the economic benefit that was supposed to be harnessed from that particular project, it's changed shapes definitely. So the economic structure of that project is already not viable, because people are boom road. They have gone into different businesses. They are no longer doing businesses, or they are no longer intending to do business that connects that particular project because it has delayed. Mm-hmm. So the economic impact of corruption and in terms of struggling the economic growth is so high, and the government needs to refocus on killing those structures. Yes.
All right. Okay, so as we come to a close of this conversation, I'll start with you, Mir Thakar, there in Mombasa. What are your closing remarks and maybe your outlook for the year 2021? And if you could just make that short, maybe 30 seconds, please.
Well, first of all, I'm looking positively towards inflow of more concessional foreign debt, which will help boost our FX reserves and perhaps stabilize the Kenya shilling. This is concessional debt from the IMF and World Bank. Estimates put it at 350 billion. So this will help propel our FX reserves back to over 5 months of import cover, perhaps 5.5 from 4.7 currently, and just above the EAC convergence criterion of 4.5. Secondly, I also look forward to an environment that promotes more lending to businesses from removing the arm twisting of lenders by the regulator and allowing them to lend freely to high-risk groups, reflecting the pricing that's inherent in such groups. And third, I would also request that some work towards eradicating corruption and implementing more projects that are beneficial to the citizens, like, for example, the recent railway that was done for domestic use in Nairobi. Such projects should also be prioritized. And I think we should also look at ensuring that the state-owned corporations become healthy again, including Kenya Power and other corporations which are under distress but are very valuable to the citizens.
All right, thank you very much, Mutha Kadhia, investments analyst from Mombasa. Just to close, David Kingo, what are your closing remarks? 30 seconds, please.
So definitely what I mentioned is that the government needs really to focus on money supply and putting money into people's pockets. So the conversation of interest capping was closed, but now still commercial banks are not lending. So the government needs to discuss with the central bank and see how much they can cure that, so that people can have money into their pockets. Number two is putting money into people's pockets through what we expect in the forthcoming, in the coming budget analysis or budget release to ensure that we still trigger the economy. Number three is that we don't kill our economic recovery strategy after COVID-19 with politics. Let us have seamless politics that are not affecting our economy and businesses, and in that way we shall see a fruitful 2021.
All right, thank you very much, gentlemen, for joining us here to discuss matters financial management. I have been with Mutha Kadhia as well as David Kingo. They are both investment analysts. Thank you very much for your time. Well, we shall be back with more after this short break. Do stay with us.
Tonight on KBC Channel 1.
Before killing Sushim, we must kill Ashok and make the rumors of his death come true. After that, I will send Sushim a message which he is waiting for. Sushim will definitely come to meet you.
I wanted to share a lot with you, Karniki. A lot. I wanted to tell you the truth about me. I wanted to make you realize that not every Magadh citizen is bad.
You have hurt me the most now. I shared every wound on my heart.
Ichok is searching for you desperately. He won't let go of any chance to kill you. Do you want to give him that chance?
On the next episode of
Naona kama kiasi hiki hiyo satosha, sio? Pesa si za kwangu. Kwani wewe unaonaje?
Lazima ujue senti zatoka wapi unazokula. Sikujilia tu na kujistarehesha na nini kama tuonavyo hapa TV, makochi na nini.
Si chake hicho chumba, ni muongo. Nitakusema na beni nyamazeni, nitakusema si chako. Wacha babako hapa kukopesha kahawa na mahamri, Wareresha tu zako Malindi. Nyo.
Tunakupa burudani.
na umbea, yani stories zinazo trend kwenye mitandao ya kijamii.
See baby, now we are two in one. We are two in one.
Interview kali za wasanii wapendao.
Mguu pande panda milima, aoye izungushie hapo ma. Kama una
Ndani ya March of Life kupitia KBC Channel 1 na Pwani FM.
Kuanzia mida ya saa 3 mpaka mida ya 5 kamili asubuhi. Ukiwa nami nite Ken 1GB.
Mimi ni Marco. Keep it locked.
Many thanks for staying with BizCheck here on KBC Channel 1. Remember that you can interact with us on Twitter. We are at KBC Channel 1. My Twitter handle is at Betty Kiptum, and on Facebook we are at KBC Channel 1 News. We now want to shift gears and discuss matters the blue economy, how the country is tapping into its blue economy resources from the rivers, the ocean as well as the lakes, and just what opportunities lie there for you in terms of just tapping them and providing employment for Kenyans. And to discuss this is Jesse Wanyeki. He is the advisor at the State Department for Fisheries and Blue Economy. Karibu sana.
Asante sana. Thank you, Betty.
Karibu, and let's just start with the blue economy. Unajua, many Kenyans have been hearing blue economy, blue economy. What is this blue economy?
Blue economy is as blue as it sounds, because it is economy on the life under the water.
Right.
And the opportunities available over and under the water. So it's entirely economy and business opportunities around the water. Yes, as blue as it sounds.
As blue as it sounds.
Yes.
Right. In 2018, just to give an overview, about the Agriculture Ministry said about 440 billion shillings is lost annually because of the failure to exploit fully the blue economy.
Yes.
So that means this sector has quite some potential.
Yes.
What is going on currently to ensure that we are not losing this money?
Indeed, there are various measures that are being put in place by the government and the partners and stakeholders, because the government cannot do it in isolation. And first of all is to put the right infrastructure in place. And you know, from 2018, we didn't have a concept or a department on blue economy. So today, under the Ministry of Agriculture, the President and with his wisdom and advisor, he established the ministry, the Department of Fisheries and Blue Economy.
Right.
And Blue Economy came after, initially, the small states around the oceans claimed that as the people are talking about green economy, they had nothing green about their countries. So they needed to also discuss opportunities available around the oceans and around the area of the water bodies that surround them. And so the concept of blue economy came into the picture. And it became a reality because at the end of the day, we realized that even the countries that also have a green and border the oceans have not exploited the resources available in the oceans as they would like to realize the potential. And so it was hyped and it was drummed up as a concept that you can also come together and master the resources and the capacity in order to help those countries that border the oceans and have the lakes, the capacity and the knowledge of and the infrastructure of redeeming and exploiting the resources under the water. And the resources under the water, remember, blue and water It's part of the ecosystem.
Right.
And we also have what we call the ocean ecosystem, the lake ecosystem, and the ecosystem itself is a habitat for animals. There are animals that call water home. These are the fish and all the aquatic life. And so that means that before you think about the ship that moves on the water, you think about the animal that lives or the organ that lives under the water. Right. So it means that you have to make it conducive so that as you exploit the ocean on transportation, as you exploit the ocean on the opportunities available, just know that you are dealing with an organism's home. It's a habitat for fish, it's a habitat for aquatic and marine life, and so you need to think about it. So that at the end of the day, you do not just overexploit and cause hazard and bring hazardous substances to the ocean and to the lakes and to the water bodies, thereby killing the very life that also is part of the ecosystem of the blue economy. So literally, that's why you find that fisheries and blue economy are clustered together, because literally you will have no capacity and you will have no business with an ocean that has no life, a dead life.
A dead life.
Literally, we need to have a way that we can combine these two things together so that we have the best out of the habitat in the water and the best out of the non-living opportunities.
Okay.
So we have opportunities that are organic and others are non-organic. So that at the end of the day, when you're exploiting them, you have the capacity to balance and to make sure that you get the best out of the transportation or shipping, but also you go the best by making sure that you do not pollute the environment and the habitat of the aquatic life.
Right, of course, conservation efforts have to be done there.
Exactly.
And maybe Kenyans, most of the time when they hear of this blue economy, it's just the sea and the lakes and the rivers, but they don't know how massive it is. It said we have about 243,000 kilometers square. Of ocean spread. That is 42% of total land area for Kenya. That is how vibrant our blue economy could be, you know, or the potential it has. So even as we look at this particular economy, you've mentioned the shipping of the shipping material, or rather the shipping economy. There's also the issue of fishing. What more is there under the blue economy?
You can even categorize. Blue economy can be categorized into every individual ministry that we have within the government. Because if you look at the Ministry of Agriculture component has a component within blue economy.
Right.
We have seaweed farming. We have a lot of, we have mariculture, which is part of agriculture, where people and farmers can farm directly with the seawater. You don't just have to eat what the seawater brings to the shore. You can also plant and harvest within the landmass in the areas of low tide, where when the tide is low, you can plant, and when it comes high, the waters the plant, and so forth. And we get a lot of chemical products from the seaweed, including, you've seen things like the soaps, beauty soaps, and what have you, some medicines. We get a lot of it from what is grown through the mariculture. That is agriculture. If you look at energy, Ministry of Energy, we have tidal energy, which basically is energy that is tapped through the tides of the sea. So that is one area, and one area of opportunity available. So as you talk about business in the blue economy, we are looking at where do we cluster, which ministry, and where do you cluster and plug into every ministry. If you're interested with the ministry, for instance, fisheries, we have the fish in itself. The ministry, the government, some 3 years ago, revoked the licenses of foreign vessels that were fishing in the deep sea, because at the end of the day, the Kenyan government could not get accountability in terms of taxes, and we have a lot of money, as you had said, that over 400 billion available, but you are losing all the resources and the money, because there is nobody who could account to the government of Kenya how much they are getting. Even if they catch any type of species, you could not tell. There was no regulation. So the government revoked those licenses, and instead they committed the licenses to local people, Kenyans themselves. That's empowerment, deep in the sea, that Kenyans can now come together and go to the sea and do what is called deep sea fishing. And these licenses are available to Kenyans and the ministry, because through our principal secretary, the very able Professor Antiba, who has been at the helm of the fisheries and this particular state department for nearly 15 years, has the capacity and has seen to it that over time, this collaboration and empowerment of Kenyans through the sector of fishing and fisheries is being achieved.
All right. When you talk about all these, the mariculture, the seaweed farming, the fishing itself, it needs capable people to take advantage of these opportunities and ensure that even as they do the exploitation, as you said, they are conserving the marine life, so to say. So is there something that is being done to ensure that capacity is being built and there is sufficient human resource to take up the challenge?
Yes. Number one, the State Department of Fisheries, through the Ministry of Agriculture, have enhanced training and capacity building through improvement of knowledge and technology through training of fishermen. Currently, as you're talking, there are over 1,000 trainees who are being prepared by the State Department through the Kenya Fisheries Service, which is a state agency under the State Department of Fisheries. And they're seeing to it that the people who are interested in investing in this area, either getting opportunity through employment or getting opportunity as investors, they have the know-how and they have the capacity to invest and to even carry out business within the fishery sector. Other areas, individual ministries are supposed to come up with their own agenda. If it's the Ministry of Energy, they should come up on a way of making sure that we have registration for tapping into the sea energy. You've been seeing the ministry doing oil exploration and gas exploration in the sea. That is part of what they're supposed to do. It all comes under the blue economy because that is exploitation of the resources under the sea, under the water. So the ministries individually are establishing capacity on how to do and how to do. If it is shipping under the maritime, they have their own responsibility of regulating the vessels that are coming to invest and to exploit the resources within this. But so it's a congregation and a collaboration between these two or the various ministries within the government that are going to realize the full exploitation of these resources.
And even as we exploit these resources, there's of course the raw material that comes out of it. There's value addition that is supposed to be done to maybe some products such as the fish. How about the markets? Are the markets available, and what is the government doing to ensure that local investors can get the markets out there?
I'll give one example, and I'll dwell more on fisheries.
All right.
Because in 2 years ago, that is in 2018-2019, the State Department launched a campaign dubbed Eat More Fish Campaign. Eat More Fish Campaign is to enable the tribes and the stigma, for instance, that some tribes have in Kenya against eating fish. You serve a member of one community fish, and he or she says you cannot eat the fish. Because it's served is like a reserve of one community. And so we realize that we have to create our own market locally by enabling and by encouraging Kenyans to eat fish. And so the government, through the State Department, went ahead and established and launched a campaign on Eat More Fish campaign. And we have held several Eat More Fish campaign launched by Professor Ntiba and the directors within this particular sector. And it has yielded a lot of fruits and making a lot of sense, to an extent that we are talking of Kenya today has a deficient of about 400 metric tons of fish that needs to be eaten and is not available
for the local market.
For the local market. So we have a huge deficit to meet. And so we are encouraging people to get into fish and fish farming. We have another state agency, the aquaculture, which deals with aquaculture, that's fish farming. Because you can either catch the fish from the water body, or you can fish it yourself, you can farm it yourself. And after 6 months, you have your income and you have the fish to the economy. And at the end of the day, we are encouraging that the market will be available. Through the Eat More Fish campaign, we will realize new frontiers of people eating fish. And we are encouraging people, twice a week, make sure you have fish on your menu. And don't say that you are in the rural Kenya. That's why we are doing fish farming. Places like Nyeri County, Murang'a County, Kiambu County, you can imagine they are not near a big water body, but they lead in the fish production through fish pond. They have so big numbers that totally what we get from Lake Victoria is surpassed by what is farmed within this particular region on fish farming.
All right.
So you can imagine what the demand we have. And it all translates to the money, because as you eat the fish, the farmer who laid the fish gets the money. So it is a plus to the economy. So, and it is helping. And that's why we do, if you're about to harvest the fish, we go out to the churches, people announce and make announcement to the community in public barazas, and they all meet and they do it. If you look at through what also the counties are doing in collaboration with the ministry, is that they're establishing various centers where you can get every information you need about fish farming, lining, distribution of lining for the dams, the type of water you need to use, the fish feeds. And the other day through IFAD, the ministry brought together counties, about 15 of them, which are benefiting from establishing of fish feeding factories within the Republic, which are going to help the farmers who are already rearing fish access affordable and quality feeds for the fish. And that is only about fish farming.
Right.
Yes.
As you talk about the local market, I'm curious about the international market now, and this is where value addition comes in quite handy. Could you speak about what's going on in that area?
Now, as you have seen also with the COVID, it's important to have local stability of anything, because we have in the past dwelled too much on the international market. If you look at tourism, the country is spending too much money to market the country out there, and ignoring the local population. But all of a sudden, we have realized, if you don't put your house in order, if you don't invest back home, then one time, that country out there might lock the doors on its own people, and you may not have that value addition out there. And so you can see, that's why we put a lot of effort locally to make sure that if Kenyans alone can meet this demand of the 400 metric tons, then it means we may not even need the international market. It is not bad, but once we are self-sufficient locally, it means we can welcome the foreigners. Nonetheless, in the deep sea fishing industry, the players still find themselves connected with the international players, because at the end of the day, the cost of investing in the deep sea fishing is in millions, almost hundreds of millions of shillings. That means in the letters of licensing, the State Department acknowledged that the locals, though they be holders of the licenses, they don't have capacity to go to the sea. And so they left it to be done through the joint venture agreement with the international players. And that means that once you go to the sea, the people you are doing the joint venture with have the capacity to sell the fish out there. But even if you do it, the State Department has allowed as a law that 30% of what you catch in the sea or outside must be docked and must be laded in the country for the local market. So literally we have 70% to go out there, as we have 30% to come in here. That is to supplement also the local farming efforts of the fish.
All right. Just as we come to a close, let's talk a little bit about the conservation efforts and also ensuring that there is no overfishing going on. What is the government doing about this? We have enough regulations in place. If we are talking about the Indian Ocean, for instance, and Kenya has such a big boundary, over 600 kilometers of ocean boundary in the Indian Ocean. And Kenya is a member of the Indian Ocean Tuna Commission. Indian Ocean Tuna Commission, and current Kenya is the chair. It has 14 members, and so we have treaties that have been set up to regulate and to avoid overfishing and destruction of some species. The Principal Secretary and our Professor Antiba has been very particular with the issues of overfishing. If you look at the Lake Victoria, he has very been keen on issues of the Nile perch, making sure that there is a particular category and size of Nile perch that you cannot remove from the water. If it is big enough to be a mother and to produce many eggs, you are not supposed to get it out. And so painful sometimes when you see people competing to get the biggest, and that is the mother of the future generation. So through the law, you are not supposed to get that big size Nile perch, because you are going to finish
the progeny and the continuity of the life of Nile perch. Right. On the other hand, you look at the regulations that have been set, and they were launched by the Honorable Minister, the CS, Mheshimiwa Munya, who is our minister in the overall Ministry of Agriculture, through the fish regulations, that we are supposed to have work in counties, and counties are supposed to enhance that there is order also in trading of the fish once it is licensed, because the process nowadays is the State Department licensing at the national level, licenses the fishermen and licenses the vessels that are being used to go and fish, including the nets, because the size of the net also determines the size of the catch that you get. Right. So it is regulated by the fisheries officers throughout, and we have them at the county level in collaboration with our state agencies, the Kenya Fisheries Service and the Aquaculture Development Authority. And they are very keen to make sure that we have preservation of species and we avoid and keep off overfishing and illegal fishing. Yes.
Right. Thank you very much, Jesse Wanyeki, for joining us and having this conversation with us.
Yes. Thank you so much.
Well, that is the state the advisor in the State Department for Fisheries and Blue Economy, Jesse Wanyeki, and we have been talking about matters tapping the blue economy. What opportunities exist there for you to join in. Remember, there's a lot that's going on. There's training of fishermen, there's upgrading of infrastructure as well to support this particular sector. Thank you very much for staying with us here on BizCheck. I'd like to hand it over now to my colleague Nancy Okware, who's coming in with the Swahili version, that is Tamrini. My name is Betty Kiptum. Do have yourself a lovely afternoon. Bye-bye.